Okay, welcome everybody. This is Giuseppe Basile, also known as the FibStalker. Thank you for joining today. Today is, and I will need just 1 minute here. Today is November the 9th, 2016, and as you know, this is a day after US election. So just give me 1 second here. I need to set up one of my screens. Bear with me a couple of seconds here. So I hope you had a good day. Today, we saw the unexpected results in the US elections. The new president of the United States, nobody was anticipating it, or at least nobody who actually is attached to the media, and actually we also discovered that the media has been very, very biased in this election, and probably the media, along with Hillary Clinton, is the real loser here. So let's start here. I'm going to divide this webinar today in 2 parts. The first part is going to be a post-US election market reactions. I'm going to look at particularly the SP 500 and the dollar index, and we'll see what we should anticipate for this market. And then I'll do a review and try to forecast major pairs. The reason why is try, and you remember last week I have not given levels as well as recommendations, at least not in detail 1 by 1, and the reason that I was not planning, I did not trade beginning of the week. I wanted to see the result of the elections, and we saw great spikes basically in all the markets here. So we're going to review a few of those markets as well. So welcome. Today is November 9th, 2016. It's 7 p.m. EST time here in Toronto, and as you know, is job number 1, trader's job number 1, risk is low, and I will present charts. Those have to be, all the materials to be considered for educational purposes as usual. So if you are watching the video, please stop it here and read the disclaimer in detail. A little bit about myself. I'm a computer science engineer. I have a master's in finance as well. And I'm a certified market technician. That's not something I like to use, CMT, because that actually it's the acronym for certified market technician. Anyway, I have a diploma as a market technician with the Italian chapter of the International Federation of Tech Analysts. I started trading in 2000, committed to research in 2003, and I only understood the importance of being mentored in 2006. So I started looking for mentors, and had the opportunity to meet great mentors like Van Tarp, Ivica Juracic in Europe, David Asley, living in California, and I read a lot of material from Joe Di Napoli. I launched FibStalkerTrading.com in 2012. I keep enrolling in my FibStalker Methods Coaching Program. This is now its 5th edition. If you're interested, drop me an email. And I'm about to launch the FibStalker Winning with Algos community, and today I have a free gift for you if you stay with me. Recently I was also involved with the Canadian Society of Tech Analysts, of which I am a professional member. I'm a contributor of FX and wrote a number of research papers on trading and investing as well. And one of my papers, an examination of the linkages between money management and trading goals, is also going to be, that it has actually, it has been published on the Canadian Society of Tech Analysis Journal of November 2016 as well. So very interesting if you are, what you think about it. All right, so let's start. Post-US election 2016. Let's look at the market reactions, but most importantly, I like to look at what happened before to try to forecast what's going to happen next. Otherwise, I mean, this is not just a commentary of what has happened. I'm not interested in that. I'm interested in the value that they can bring to the table. And particularly, that value is try to understand whether algorithms or classes of algorithms and program trading have taken any position or are supporting price in one direction or the other, as well as what dump money, what non-professional money is currently doing in these markets. Okay. Now, before I get there, and if you are interested and you liked this video, please feel free to tweet it on Twitter, and you can use a message like this one. Now, before I get there, I told you I had a little gift for you. I'm launching the Winning with Algos free course. This is a course which I derived from a webinar that I gave to the University of Western Ontario, and this is for you, for your enjoyment. And this free course is a 6 hours video course on the effects of algorithms in modern market, and the title of this course is Winning in Modern Markets by Leveraging the Effects of Algorithms on Price. As you can see here, I'll give you the page where you have to go, and in the page is a little video, a little teaser with the 8th part of the course. And there is also the course content here. There are the 8 lectures here. First one in trading game, the second, the new philosophy in modern markets, algorithms, price, and price structure. How high frequency trading, which is not my edge, but I'm interested in knowing how high frequency trading affects my edge, and this explains that as well. There's a nice example recently. The power of algorithms and psychology of the market. This is a jaw-dropping lecture. This is going to be very interesting, and it's gonna produce some wow moments, I believe. And then the importance of money management reaching objectives, the fallacy of traditional tech analysis, and the role of fundamental analysis. And you get a little bonus as well there. Now, how do you get this? Very easy. You go to Winning with Algos, as you can see here, 3 words, Winning with Algos, and .com and /start. And this is free for your taking, and so take advantage of it. All right, so let's continue here. So what I want to talk about is the effects of US election 2016 and the market reaction. And the obvious market I want to start from is the S&P 500. And yesterday I was watching CNN, I was watching the projection and following what's going on. And we saw this market meeting one, not both, just one of the 2 targets I've indicated in last week. One was the 255 level, and that level was an obvious level here. It was simply the start of this monthly dump money area here, and that was the 255. It appears that as soon as price got into that area, it starts getting a bid. So this behavior seemed to me matched, but from the reality that was actually being laid upon, in front of our eyes. It's because it has always been said that that the market hate uncertainty, but it appears that it was Trump's declarations were enough to reassure markets. So again, the technicals here have predicted the outcome that we were looking at. We know that every time, historically, this market, and I'm talking about the SP 500, particularly, I like to look at the SP 500 even in futures. Every time this market gets into an area of potential participation from weekly long or below it, there is a rally. And as you can see, sometimes the market does not dip into that area. But when it does actually, or actually pinches the 13 EMA, this would be the monthly 13 EMA. We always get a reversal here. Okay, and this is true on the bear direction, on the short direction here, and we see this market getting into these areas, and in 2008, that only up at once. I feel that this is a behavior that we only see now. When we go back to the previous bull market starting in 2003 here, because the 2008 correction, we actually saw the same behavior. Okay, so every time this market pinches or gets heavily into the area between the 26 and the 13 EMA monthly, you can see that there is a reaction. Now, whether that is the last reaction, as in this case, we don't know. But still, we have a reaction, and we would have plenty of time to reposition ourselves if this was the last move higher in this bull market. I personally don't believe so. What I believe, though, it's not very important in trading, because Mr. Market will decide what to do. And again, this was a characteristic that we saw also in the previous bull market. They only have partial data here, but this is another case, other two cases here, pinching, and then eventually that will be a last leg higher. Now, is this the last leg higher in this market? I really don't believe so. And one reason is this trace that you see. This is a trace which is actually the continuation of a sequence, and I've shown that sequence in the past as well. There was a traditional measured move, hit targets, and let me do this a little bit bigger here. And then we had another measured move here, which actually hit targets. And then the price started trading into extensions here, and we saw this price moving into the first and the second target here, and I broke that second target. And as we keep modeling this, the behavior of algos here, we keep actually identifying bottoms. Now, in my strategy, and this is my edge actually in my trading, I never blindly buy these levels. I always test these levels, and one way is to look at how the algorithms are positioned in the opposite trend here. So as we continue here, you could see that this market went again first target, never retraces enough, and it went to the second target, and then it actually continued. At some point, this market came back to actually trade the next measured move here. And that's something that now, I commented in the past as well, before the fact, on my videos, and also on FX Trade. So this is known before the fact. The market went into that first target here, and then it retraced. And when it retraced, well, it retraced in exactly the same anchor new high, the next measured move here, logical measured move, and this level has held now since basically July last year. Okay, so when it comes to how algos are positioned, that's my truth here, and and that's my truth, that helped me and served me very, very well in the last few years, and that's something that I certainly don't want or don't need to change. Now, when we look at where this market is going, considering that there was a double bottom here on top of this 1832 back in summer last week, as well as there was another double bottom here at the beginning of 2016. And this market has two targets. The first one is 2203, and we might see this very soon, maybe in 2-3 weeks. And I think if we're going to get our Santa Rally bear here, that rally is going to bring price right into that second target, 2400. Now, if you know my work and if you have reviewed I've been publishing the last 3+ years, 3 years on FX Street, you will certainly recognize this level, which I have been promoting since basically 2013. And the reason why I believed in this level is because there are 2 reasons for that. One is the direct projection of this later measure move, but we could only know this basically in 2015. Okay, but this target here lines up with a larger target, and to show that, we have to go back to the lows between 2003 and 2008, 2009 here. Okay, and bear with me here because this is very important. These levels are relevant these years, and in fact, these levels and these traces are relevant since the beginning of the modern equity markets in US, in North America, believe it or not. All right, so very technical market. These traces model something fundamental about the psychology of the market, and that's the reason why we see them working. And for those who know my work, know also that the 50% retracement that we saw 2003 here, the 7690 here, this is a continuous contract for the SP 500 mini. We saw the market participating in this area, and you will remember that the low was at that famous 667 or 666, you name it, and continuous contract. So you will see this. Sorry, this 667 was the low here. Now, the reason why you see a lower low here is just because the way these prices compose together. Okay, it's and for example, the SPY, which is the ETF that tracks the S&P 500 cash, is actually, as you will see here, is a little bit lower, but that level was around 667 on the SP 500. Okay, so it's a bit lower, but that's where the future went. Now, when you look at this participation here, what do you see? You see participation around this level. Again, the first time we got, it's not the first time we got a 50% retrace from the lows in basically 900s, okay? If we put together the equity markets, starting from the Dow Jones and then transitioning to the different version of the SP 500 and end up with the SP 500, with the final version of the SP 500, that's exactly what we get. From 0 to 1581, this was a 50% retrace here, and again here, which has obviously 2 targets. The first one was touched time ago, 1954. It actually was touched in 2014. Imagine where the second one is, okay? The second one is 2550. So that 2400 target that we saw before is actually helping price into this much larger target. Will the market get there? We don't know, and how the market would get there, we don't know. But considering how algos are placed and considering how dump money is supporting this price, you will probably know that this bull market that we saw here is one of the strongest in the 115, 16 years of existence. Equity, North American equity markets, and basically that's a very possible target. When that is going to happen, we don't know. There is support from dump money as well here. Look at how look at how inclined and the pace of these moving averages here. So I'm not going to look for a reversal here right away. The market before the reverse, they have to work out all the support and participation that we get from dump money participation here. Now, we also know very well that markets actually start on complete detachment from stock investing and end up in euphoria. And we didn't see euphoria just yet. In fact, there is still a lot of, there's still billions and billions and billions on the sidelines here. So we didn't see any, strong participation in the upside. Certainly nothing like we saw in the 2000s. Okay, so this is very important. The sky is not falling. Trump represents change. Which kind of change will be capable of bringing in? Obviously, there is only a certain number of things that Trump can do and change or reverse if needs to be. But the sky is not falling here. The media in the United States are the big losers. They didn't get what really was happening, and the markets here seem to be trusting the environment here. Now, can this change in the coming days? Of course it can. And remember, though, that we have very strong areas of support below price. And you remember that, and I'm going to show this on the weekly time frame here. You remember that I also mentioned another level. There was the 2020, which was never tested, so far at least. But it doesn't mean that that level cannot be tested. So you have to be ready for uncertainty. As you can see, the market came 8 points shy at that level. And what this level is a further extension here that if we place, as you can see, there's a first target above the previous highs, so this would be new highs. Then there's a second target that helps price into that 2400. But remember that there is also 2550 here. Okay, so are these levels possible or real? They're certainly real. There are algorithms that are supporting this price in different time frames, and there's no reason why you should not believe that these levels are possible. In fact, towards these levels, my long-term investing retirement portfolio. So the point here is, we retest in the coming days these levels, or even test it properly, yes. And if that happens, this will bring price again into this area where historically, traditionally, we see participation. We saw that participation last night, and if the market were to come back again out of uncertainty, and this is still possible, then we would see again participation, and that would be another opportunity to get long the equity markets. Okay, so this is my assessment. As you can see, I'm not making any, I'm not discussing economy or the future of America. I mean, I'm not qualified to things, but I'm only looking at the price here. The dollar index move has been dramatic as well. Same kind of move here. We saw an extreme move during the night and mimicked basically the SP 500. And for this market, you will remember last week I was looking for the 95.50 level. That's one of the levels I mentioned. Why is that? Simply because this was the 50% retrace from the highs after this market has broken the back of the bear, so to speak. Why is that? Because if you remember, in the last weeks, we saw important levels break here. This market is moving laterally on top of a support, which is represented by dump money here. It's all here, all right? Every time this market came into this area, started a reaction. And an important development we have got last week was actually this. Sorry, last few weeks was actually this one. Basically, this means that shares which initially were capable of stopping this price in this area here gave way here. Okay, so and this was interesting because now what we have dump money saying we don't see this market moving lower, not yet at least. And then we have smart money bear here saying, we're not getting involved here. We're not gonna attempt, as we did in the past, to push this price lower. And it's interesting to notice that in yesterday's reaction, we actually looked at a market coming back down, just tipping, just touching that at the start of that bull money dump monthly area here, and as soon as the market got there, got the participation higher from monthly bulls here, as well as there are weekly bulls here that were not capable of holding this price, but monthly did. So so smart money really had to me it seems that they had to come to terms with this emotional participation here, whether good or bad for long term. And the only thing I can say is that another level was used, the 92, 93 here. This helps us projecting price higher, and this would also suggest, as I mentioned also on our review on FS Street, that a dollar index continuing higher obviously would mean that a December hike seems to be in the cards. So now, whether that is going to happen or not, I'm not in the business of making predictions here. I'm in the business of identifying low risk setups, which obviously we didn't see this week because of these huge tails here. But if this level is real, and the market will tell us when it will tell us, well, it will tell us when the market, and if the market will get here, and if there will be profit taking. Now, some people may say, okay, there will be profit taking because it's a previous high. But it is also an area where algos would love to take profits as well. So the point is, there are still a lot of things pointing higher in this market, and that would be only the first target. The second target, believe it or not, would be 102.89. Now, Whether that is going to happen or not depends upon a lot of things, and I'm not going to, again, try to project things too farther here. Is that 154, it's very possible, and we might even see this in the coming weeks as well. Okay, so what was the reaction of these elections? The market were very scared during the elections. They were not expecting that change, and then it looks like something came in the morning here reassuring them. And obviously here we have a minus 4.5 move in the SP 500, which actually was offset starting from the morning here, and it became actually a gain here. So the market reacted relatively well. Is that the end of it? No, we could still hover around here, and we will see whether in the coming days there will be stability or instability. But again, if this market comes back, and I'm talking particularly here about the equity market, when it comes back into this area, it's going to be a buy for me. It's not going to be a sell. This market is nowhere near a situation where you would be interested in selling it. That's my own opinion, which I back with my own money as well. This concludes the here, which was a reaction, a review of post-US election 2016 and market reaction. If you like this video, please hit on your Twitter account. And again, don't forget to visit winningwithalgos.com/start, where you can download for free, when you can register for free to my 6+ hours free course, Winning with Algos. Okay, winningwithalgos.com, and the name of the course is Winning in Modern Markets by Leveraging the Effects of Algorithms on Price. This first part. Now, the second part, here we start the second part of this show. I'm going to do a quick review of Forex pairs. I'm not going to give any recommendation this week because of the spikes that we saw in these markets, and wait a little bit, just because I know that the levels, if I use the levels now, those levels are not going to be relevant. Of course, when it comes to analyzing areas and levels which are relevant for algorithms, you don't want to spikes as well, and there is a little bit of science around that as well. I want to say good evening to Pantelis and Kerry as well. Thanks for joining, and I hope you're finding this interesting, and I hope you are safe after the last 2 days moves here. Okay, so let's review the Forex pairs here. So I'm going to switch to my chart, and I will leave out SP 500 index. I just want to touch very quickly, although not Forex pairs. I want to touch on silver here, and silver as actually, as you know, it's actually broken the sequence of measured moving higher here. We talked about this a number of times. You can go back and watch the video as well. We traded this successfully during the FX Street Tokyo Open Room as well. This market has actually traded along here, but to me this long was not warranted. And the reason for that is because of the general direction of the dollar index. Okay, so this market came to trade the next measured move here, which was all respected. So here at the moment we have a bear conditions for the dump money area on the on the weekly time frame here. So they're not bull, they're bear conditions. And we have bull weekly dump money, and then we have bear the smart money here. So smart money is actually pushing this price lower, which is here. And today again, we saw, sorry, this week again, we saw bears actually being capable of stopping this price here. Where are the targets? The targets are below, which would suggest again those targets that we saw for the dollar index. Okay, so if this should this level be retested again, there would be an opportunity next week when the market are going to hopefully be a little bit calmer. There will be an opportunity, but this trade may already be on here, and there may be no opportunities to re-enter this trade on the short side. As you can see on the weekly time frame here, we can see that participation as well. Okay, we have a little bit of support from daily dump money here, but I think this market had the opportunity to break out the sequence of shorts, and it didn't do that. Same situation for gold, so I'm not going to spend a lot of time on this. The only difference is that we saw a big spike here, which even actually has broken the 50% here, but I won't consider this. And so again, this market clearly reacted to the dollar index. Can the situation change? Yes, there can be indecision even on very high volatility here, and have a market that does this. It's not ideal. But to me, it seems at the moment at least that the direction is going to be down. So very, very quickly, euro dollar, of course, reversed all that buoyant positivity, or suppose so, that we saw recently. There was, of course, only a reaction to the weakness, temporary weakness in the dollar index. Interestingly enough, the participation yesterday, and there was a lot of buying of the euro in fear of disasters in the US, brought price back into this monthly short dump money area, which actually pushed price lower again. So where is this market going? We actually have two targets now, and any retest of 111 is going to be a positive test for shorts. And as I mentioned, we have two targets. We have the inner targets and the other targets. The other targets are actually bringing this price close to that low, to those lows, 106.65, and there is also a second target below here at 103, so near parity here. So if we still see US dollar strength, that's where this market is going to go. So I have 6 more minutes, so I'm going to touch on. I cannot touch on all the markets here. I'll touch on the majors, and what I want to show here is the euro pound. Finally, you remember that we spoke about this market, and I'm also considering the analysis that I normally do for my students and the subscriber of the Winning with Algos signals and reviewing signals. But as you can see, as soon as this market left this area here, we saw a swift move into what we believe should bring this price into 87.20. So I think that it's not, obviously was not easy to trade, and I'm not trying to represent here that was able to participate in this trade. In fact, I have not even traded last 2 days. But for a confirmation that whenever we lose an area of dump money, the market moves quickly into the next area. That the US dollar, Japanese yen, also reaction in this market. We saw this market breaking the 50% here and then continuing higher. So again, I will not consider this tail here. This is a daily chart. I will consider the The 102.80, of course, had you entered here, you would be stopped out from this market, but still the target stays. So if you have a long in this market, or somehow you were able to re-enter this market yesterday, mind that the targets are at 106.80 and 108.87. That's what the algos are looking at. Of course, we always need to put things in context, and we need to see where the actual resistance is going to be. And now that this market has actually completely worked away the resistance from bears here, the two targets are actually reasonable. And look at the beauty of it. Look at where the second target lines up. About this, it lines up exactly into that area where we're going to see potential monthly dump money short. So algos will do whatever they can in the coming weeks to bring this price and bridge this gap here into 108.90. What is unfortunate is that we could not take advantage of this entry that that I recommended as well. Because of the reaction that we saw, but that's what we have to anticipate for this market. So any opportunity to get involved in this market in a retrace on the daily should be considered as a good opportunity to actually continue trading this market on the upside. And as you can see here, we have the help of the dump money here, but on the monthly, on the weekly and daily here. So any retraces here should hold above 104.88, and if the market anyway gets into this bull daily area, I don't know if that is going to happen. It could be an opportunity to go long this market. US dollar, Canadian dollar, we saw and then strength. So we saw weakness that pushed this market higher, and this might be a little bit confusing here, but the levels are there and are significant. So over here was the market coming back and respecting an extension. This is not visible here on the weekly, and we have to look at that on the daily. And again, the picture here, and that's what we see here. We see a participation of algos on an extension here. We saw this price being very, very extended in at the end of October, into the end of October, and then this market apparently held this level here, which is actually pushing this price high. Now that so now that the now that the situation is cleared a little bit, I think we can see that 135.80, and potentially we can see higher prices as well. Okay. Next, we want to look at New Zealand dollar, US dollar. And this market, big moves and surprises here as well, all because of well, both smart money and dump money here. Smart money actually the smart money here actually gave up initially, and the whole trend has failed here. So I was looking for a short in this market, and that's why we always have to take into consideration also what bear money is doing. Once this market is broken here and the bull were not supporting this market, what happened is that short amount of time the bears were in control, and in fact they actually shorted this market around 72.6, and then the price moved lower, right? So However, then when we factor in the bull money, that money here, we see that the monthly here acted as a support, and the weekly actually acted as an area of participation on the long side, and that's what we got. So I was, you remember, I was looking for this behavior, but here, basically, the dump money never gave way to this market. Okay, so now, obviously, if the US dollar is going to continue higher here, what's going to happen is the New Zealand dollar is going to challenge that level again, and eventually the level will give up. And we know that if and when that happens, this market could actually, that move that we were looking at a few weeks back, I was looking at a continuation lower here, but here and here as well, after that smart money short has traded, but that never happened. Now, it doesn't mean that it didn't happen at the time and is not going to happen. Simply the way other players are playing this market actually causes these diversions, and the dump money here is actually behaving like an obstacle here. So this scenario is still possible. How do we take advantage of it with small risk? It's another story, and if you follow me, I will guide you, and I'll help you in taking advantage of that with small risk. That's what we want to do. But as you can see, there is still support here on the daily time frame, so this is not going to happen anytime soon, and we'll need to wait a little bit here, and maybe rather than start a position now, wait for a move lower and then trade the next leg lower. Okay, so that's what I have in mind for this market. And finally, let me look at the Australian dollar and pound as well. Obviously, all these markets have moved a lot because of what happened yesterday, but that will calm down. Volatility will go down, and we are going to see market are going to go back to under control, literally, by algos and other players here. Australian dollar, it's pretty interesting, a very, very conflicted market here. There is participation long and short, long on the weekly as well as dump money weekly, just push this price lower. But at the same time, this market is actually within an area of monthly dump money short. So shorts are here. The longs are below this price, and we saw both participation here, smart money and dump money, weekly dump money long, and that's what has kept this market kind of floating here. But there is a lot of resistance here, and it's not really an interesting market to follow here. Of course, this market could turn well, but the New Zealand dollar user would be a much better and easier play when it comes to this. And finally, I want to close with the pound. This is just dollars, another major here. And this market, if you followed me, has been a very nice and very, very clean and regular sequence of measured moves to as a testimony of the large participation in this market. And we know very well that when the volume is high, then participation from algos it's easier, which means that these levels that we know well in advance are respected more easily and frequently. So if you remember, in the past weeks, I mentioned that this market could be in a consolidation here before starting a move higher. The reason for that is there was a larger weekly target that was hit here. I have noted on the screen as well. You can go back to the other videos. And also the sequence of measure move had the previous sequence of measure move, which was absolutely fascinating and interesting. It's the first time in my trading that we had a level that there was this level here that during the day of the Brexit here, in the very same day, very same session, traded the idea. This was a traditional chart, and in the very same day, he went to the first target, outstanding, really outstanding. We are talking about 148.87 to 133.32. So we are talking about an outstanding 1,500 pips in one day. Unbelievable. So now, the interesting thing is that this market continued lower in the following weeks and months, and then got into that longer term first target and well below that second target. So where is this market going to move and react into now is the next measurement of shorts. The shorts are not done here, okay, in this market. Of course, we can always get a rally, but when I see this kind of resistance here, we have bought bear money here, bear weekly money, which is trading this market here, saying, okay, if you get there, I want to know, and I'm probably gonna get involved. But we also have smart money here. So when smart money and dump money actually want to push this price lower, well, I mean, good luck with longs, right? So I think, and it doesn't mean that we're going to see lower lows yet necessarily, but I believe we're going to get a tradable drop here in this market. And it's important to time it properly. And those are the kind of opportunity that when you time them on the 1 hour or 5 minutes or even 1 minute, I have very successful students who actually still using 1 minute or very, very slow, short time frame, 1 minute, 15 minutes. These become great opportunities for trades. Now we'll be looking here for a trade from 128, which is this area here, down to possibly 121.50. All right. So this is it for today. I hope you enjoyed this video. This video was in 2 parts. Thanks a lot for joining me. And if you're interested, I'm launching a new session of my FibStalker methods coaching program. If you are interested, you can go on FibStalkerTrading.com. There's an area for premium products as well. And of course, don't miss all the free material, the courses, the videos, and all the other material I provide here for you. If you're interested in bringing your trading to the next level, consider FibStalker Methods Coaching Program and offering a great price at the moment. So thanks a lot, and I look forward to see you in the members area here. Okay, thank you very much, and have a great evening, and trade safe, and always mind risk. Bye-bye now.